Metals are on absolute rip, and it's giving very much 2025 vibes. So it's 22nd of August, Saturday. It is 12:05 p.m. So chance to do a bit of the weekend wrap and that, and try and sort of unpack a little bit of sort of what's happening, because as I said, the metals are absolutely ripping to the top side. But you know, these moves don't last forever. But that's the whole sort of point of these sort of weekend analysis, to sort of try and unpack and sort of say, look, you know what, is this exhausted? Because I mean, look, there was points around here. I was actually just wiped off a bunch of these charts so we could see the candles a little bit clearer. I mean, negative divergence daily sort of coming up through here. Very much a chance that, and an idea that we were going to get a pullback down, reload, and then move on. But obviously we're just sort of seeing it, and it's just gone from strength to strength. Now, it's not a pure sort of technical play in that. I mean, there has been a number of things behind the scenes, namely this week particularly. We had that big driver, which was just this week here. This on the 4 hour as well, by the way. This big drive here that got it really out of this zone here was that sort of buyback from announced by the Fed, which, mind you, only really seemed, if you have a look at the yields, this is the 10-year, it was around here that it happened. The 10 years above that of where it was. 30-year is back up above where it was where they announced it. It was long-ended stuff, but the 2-year is really sort of breaking up higher as well. So it certainly had an effect, mainly probably on the dollar, I would say. I mean, obviously on gold as well. But the point is that a lot of those other moves have kind of undone. The dollar hasn't, and gold hasn't. And I think that's what we need to really sort of unpack with it all. Now, as I said, you know, we are really ripping. We come to the new highs. There's a number of levels through here in which I thought we may have stopped. It's just taken out all of this sort of grind level here and that, which, as I said, leads me to sort of think there's a bigger driver, obviously, than just obviously there's a bigger driver than just the technicals, but it really gives smacks of 2025, because 2025, when it was ripping along, when we were doing these moves here, it didn't really mind about the technicals so much. It just sort of blasted through them. I mean, this was all no man's land, as in sort of like, you know, price discovery. We'd never been this high in gold before, so it's anybody's guess, and we can see what happened afterwards. But, you know, what we're sort of seeing now is just straight vertical, moving up through these levels here. So we sort of think, okay, should this move continue? Where have we seen sellers? Where would they maybe be targeting to sort of say, hey, look, you know what, that might be a level? Or are they just going to blow through that as well? Now, again, with these sort of things, when we're sort of like picking out these levels and that, it doesn't mean it's a top. It's just where we could expect to see a reaction. So if you long, you're trying to sort of, okay, yep, trying to sort of book some profit into those because we're going to expect a bit of a reaction. If you're trying to, I mean, it's a bit crazy if you're trying to fade this, but if you're trying to fade these are the levels in which you look for some sort of confirmation around these levels, and then sort of, you know, double confirmation of like sort of like through a trend or whatever it may be, to sort of see some sort of confirmation of a deeper kind of retracement, because all these things are relative. And by that, I kind of mean, if we look at this sort of range that we're in through here, because this had a nice range, had a beautiful sort of, you know, fake sweep at the top, and then right down to the lows over here. Look, it had all the hallmarks, negative divergence, up the top, swept the top, looked like it was about to come down, and then what did it do? Fired back up, and then back down again. And these are $100 swings, mind you. Like, these moves through here, they're not small swings. They're $122, you know, give or take a couple, from top to bottom. And so certainly when you see these kind of things here and you sort of go, look, you know what, here's a, you know, negative divergence, double top, sweep of the top, everything up to, like, if you couldn't see any of that, and particularly when you see this kind of move, that looks a perfect top to at least sort of come down for a retest, sort of like, you know, reload, and then to move on. But it didn't, obviously. We had the buyers, and you got to sort of think, what are the buyers doing? Well, the buyers have moved up to here. The buyers have moved up to here, and then they held this line here. This, you could say, was a little bit of a tell. It's a bit harder with this one because, of course, you know, we had that headline out of nowhere, which really sort of fired it away. But, you know, as I said, up to this point here, this is a perfect looking top, and it really turned out to just be a bit of a trap. So we turned into a bit of a range. So again, once you're sort of seeing these tops over here, that's fine. You're coming down, boom, comes back up, tests over here. Once you've got 3 rejections up over here, you've got more at this stage. Well, if we move this along here, you've only got 2 touches down here. So this hasn't happened yet. You've got 3 touches at the top. You've got, couple, 2, 3 touches at the bottom. This is a range, which is a consolidation. Consolidation favors continuation of the move in which it sort of came into the consolidation. So that's the point to sort of take away with this. At this point here, we were looking like, okay, nice little top, change of play as it sort of came back up again. We could see that the buying is very strong from this level down here. And that's where you got to be careful with these sort of things. This headline, I don't think anybody, like if anybody sort of says, hey, look, you know what, I knew the dollar was going down and I knew this was happening, they're talking shit, because this headline really came out of nowhere. You could say through this price action, as I said, consolidation after a sort of positive lead in favors continuation. We know that. That's how technicals work. But to sort of say that I knew the government were going to do this, well, there was a lot of talk about them having to do something at some point. Namely, sort of like, if the 10 years got up to 5%, okay, this and that. But, anyway, they jumped in a bit early with it all. Regardless, let's crack on with this. Clear all this up here. So this was a sort of like a large swing. And it sort of seems, as I said, look, it's $100 swings and that. You're like, oh, but it's all relative to this first move. Because if you actually, again, unpack this thing and we say, look, take it from the lows down here and you move up to these highs over here. Look at where these buyers were stepping in. These buyers were stepping in at the 23%. Now we know 38% is like a strong continuation level. So should you see sort of like a move up, you could still come down to the 38 and then still move. And that's a strong trend down to the 38. If you can't even get down to the 38, you got to ask yourself what's really going on there. Well, the buyers are saying, hey, look, I'm not going to wait down here. I'm not going to wait for these moves to these lower levels. I'm just going to sort of buy it and take what I can. Why would you be buying this here so dramatically after such a big move if you didn't think or have an idea that maybe we were moving up higher? And that's sort of obviously a bit of an early indicator. And this is the point of the weekend analysis, not necessarily to sort of go, oh, yeah, sweet, everybody knew that, but not unpack these things and sort of say, from the next leg, are we going to see a continuation of this? Well, based off this move through here, this part's actually obviously played out now because we've moved up, but, that's a tell for it all. If we look at the actual move from that sort of breakout move, and this was another, let's clear up a few of these. This is a price target range extension to the downside. This move through here, so from that breakout move, if we jump the fib on this one here, and we sort of go, okay, well, here's your low down here. This was the high that we did have for that breakout move. So you got your low, got your high. Look at where it sort of came back to. And this is, again, this is why fibs are very important. This wick here, whoops, I didn't get it work well. This wick here. This was that sort of sweep high that I was talking about a few moments ago when we were looking, okay, it looks like a top, blah, blah, okay. When it had its retracement down here, look at where it came back to. Right on the money of 38%, right on the very tip. So this is like the bare minimum of a back test of that level. And look at the reaction afterwards, right through to a new high. The fact that it put in a new high after coming off the 38% is the next tell for the next move. And we've carried through and obviously seeing quite a big extension out to the top side there. So again, like all these sort of hallmarks, what are the buyers doing? Well, the buyers, they're waiting down here. Well, now they've stepped right up over here. And you can see this sort of as it sort of carries on all through the highs here. You could say, yeah, okay, they moved up here, but obviously this is where they jumped in very strong, right on that confluence, top of the wick, 38% retracement, put in a new high, and then bang, on its way. If you get into a lower time frame, this is quite interesting because this is the move that we saw sort of like with that pullback broken down. This is on the 1 hour now. And, Asia straight away sold down into it. Europe sort of like kind of drifting down. This is obviously a bit of a stop run because you can say that, okay, look, we've got a bit of a pullback here, bunch of stops under here. it only lasted like 1.5, 2 hours or so underneath this level here before it started sort of bouncing up and just carrying on through there. So this obviously was just a little bit of a stop run and then away on its move. So look, the move has just been absolutely incredible. Move this up over here. Question now is like, is it overrun? I mean, look, again, at the very start of this, I said technicals can make you look a little bit silly within these kind of moves because, you know, you've got these sort of negative divergence. You'll find sort of like rising wedges, these kind of things, but they'll just keep on powering through. So look, we've got a bit of a target up around the top over here. So look, I would personally sort of say that maybe it's like, not maybe, but I would say it's not going to be done. It's not like, okay, we've hit the high here and we're just going to come back down. But we are sort of probably going to see some sort of corrective move through here if we don't get more continued headlines that absolutely obliterate the dollar. Though I don't think it's like, okay, we've got a top and we're coming back down. I think at best we're going to see consolidations. So it's still sort of really sort of buy the dip sort of moves. So we can sort of build this out and sort of say, you know, okay, where are we looking? Let's get on a 4 hour minimum. Because if you're going to see any sort of move around, that's where you're going to see it. So we've got the buyers moving up through here. So we've got a little level there. And then you've got the buyers sort of moving up through this level over here. So this on the 4 hour, pretty much disregard the last 4 hour candle of the week because, you know, most people, even though, remember, we're still in summertime trading as well over in Europe and the US. So, you know, supposedly lower volumes. So maybe these moves are easier to sort of really cut through in that. But, you know, it's certainly just moving right up here. We're overbought on the 4 hour. So if we can drag this out a little bit, it's hard to sort of really find too much of a trend in these sort of super sharp moves. So that's why you got to be careful with these sort of things in terms of sort of like buying it after it's done these moves, because the snapbacks can be quite violent. And again, they're all relative to what the move is. So if we drag this up over here, we can, okay, say this were the top, well, air quotes, top for now. What do we want to sort of see? Should we see this thing sort of cooling? Well, you've got a little bit of a trend sort of coming up here. It's quite sharp, obviously, into that last sort of day there. I would say sort of like, you know, breaking the trend is not enough because we know this thing is just incredibly bullish. You know, it's coming up over here. Even if this thing breaks the trend, it's not going to just sort of do so. It's not going to break the trend and do that. It's most likely going to sort of break the trend, shoot back up, play around like this. And if it is to come back a bit, that's how it's going to happen. It's not going to get this sort of one fast thing. So there's no point going, oh, look, it's broken this little trend here. Yep, time to short, because you'll just get ripped out a couple of times. So I would say sort of certainly sort of while you're up around the top over here, while you're above even really, let's say the 38 over here, any sort of moves down too. And this is provided that this is the top. Of course, we can still open up and go a little bit higher here. But just if we start to sort of build it out from a structural base point, standpoint, we've got resistance here. And we've got supports over here. 45.14 here. So I would say sort of any sort of pullbacks into this kind of area here are really just going to be buys. Even if you get down under here, you've still got so many layers in which you could expect to sort of see a deeper retracement where it's really probably still a buy as well. It's just that sort of like through these areas, you got to expect that you probably see a deeper sort of correction. So, you know, anything above this 45.14, I would expect, you know, a buy opportunity. If you break this level here, you will probably see some sort of speed hump around this 44, but you probably realistically, and this is maybe sort of wishful thinking, given how strong these moves are, and again, 23% retracement, 38% retracement, you know, it's very strong when you stack these things up. So, you know, from a technical standpoint, a move back down to retest this range high at 44.40 would be a great buy. Are you going to get that? Most likely, probably at this stage, I'd say not, till we see something structurally change. Because the thing is that's happened most recently, and this is where it's important to sort of obviously look at not just one chart, but a couple of charts, is what's happened with the dollar. And the dollar has been absolutely obliterated ever since FOMC, which is back here, was where Walsh said, hey, you know what? I'm not going to do anything. Let the market decide it, whatever. Then we had the BOJ/Fed intervention. Then we had NFPs coming in weak. We had CPI flat. We had PPI weak. We had retail sales weak. We had the Fed announced the bond buyback. And that's what's happened from here to here. That's a whole lot of stuff sort of stacking up, sort of saying, hey, look, you know what? We need to do something about the dollar. It's not really sort of like, oh, just, corrective move. It's like every bit of sort of data or every bit of sort of wording can sort of come out, or bits of action with the Fed and all this kind of stuff that have really sort of been detrimental to the dollar. And till you see this become viable again, I don't see a top happening in gold. Because again, if we sort of look back at most recent history, which is 2025, the dollar was getting hammered all the way through here. And yes, it's up and down, it's got a little sort of nice flow, but remember where it came from, up over here. This is January 2025, and it could not get out of its own way to the downside here. And what happened to metals through that period? Well, metals absolutely sort of ripped to the top side. Now, I don't think we're going to see, I say this cautiously, the same thing that we saw in 2025. I don't think necessarily we're going to be on this kind of rip all the way to the highs. But with these sort of things, you just can't tell. You can't sort of say, hey, look, you know what, that's it. Because, as I said, if we look at sort of what's happening through these periods, here are your technical levels where it should have stopped, and it's just powering through. So, I would say that most likely we're probably sort of destined to test at least mid-60 46s. Got a little bit of a range here, and then up until 47.40. That's a big corrective move. And if we look at this thing over a whole, from highs to lows, we can sort of see where we're at. So this has been a massive move, but again, it's relative to what we've seen previously. So in this case, obviously the sort of the downside move from the highs to the lows, we're only just pointing up to the 38% here. Now, with these sort of moves, remember, it's not going to go in a straight line, even though this more or less does look like it's going in a straight line. These things can correct quite heavily. We could push up to 61% and still see some sort of downside after that. But, the point is that's bigger picture kind of sort of stuff with it all. Yes, it's overbought. It's been overbought pretty much since its breakout. This is on the daily. So that's obviously not really something that's going to tell us, hey, we're coming over. It's just that, this particular move through here with that sort of Fed buyback announcement is really sort of what kind of sealed its fate. We had a massive move. I mean, this was like a 10% move through here. On a monthly so far, I think where's the start? That's about start of the month here. I mean, gold's up 15% for the month. That's massive. That is a massive move. And if we look at this as a, again, I keep saying the technicals don't matter, but, we can still look at where these may be, because this is a flag, obviously, that's broken out. That still takes you up 47.30. So I don't think just because, again, if you get on the 4 hour, that you had a little bit of a pullback like this, that it means the move's done. But what we can potentially look to do is have the trend break, look for a sort of an actual retest to then sort of capture it to move up to these kind of levels over here. Because I would say sort of like, unless you see something structurally change, they're doing everything in their power to control the dollar. And by control the dollar, I mean sort of get the dollar down. When we see sort of the gold and dollar sort of run so strongly inverse, like as in like, we've seen the dollar strong and we've seen, the dollar strong, well, this is what's happened to gold. Now gold's back in favor, well, what's going to happen to the dollar? So it is a very strong, look, I've always said it's about a 90-10 sort of relationship of how they sort of work inversely to one another. And this is obviously sort of a great example of it all. Anyway, so a whole bunch of sort of background there, but the point is with this that sort of like, I will be sort of looking for sort of like buy opportunities, but I'm cautious to buy it, particularly after such sharp sort of moves up like this. Let's change this so it looks a bit different. Make it orange. which then disappears. That's great. Actually, maybe it's on a lower time frame. Yep. All intervals. So what I will be doing is sort of looking for sort of some sort of buy opportunities around for a retest of that sort of previous high we had, was it Wednesday or something, Thursday, before that little sort of reload to shoot back over there. If we do get a reaction down here, if we sort of get a move and we break the trend, and people because the thing is, break the trend, people will be going, okay, yep, sweet, it's gone up 15%, this is a great short position, come down here, same sort of thing that we saw with this move here. Here we go, come back down, reload, and then through to the top. So that's what we'll be looking for, any sort of move back down into this level here to sort of match where these buyers have been on the way up, and then sort of give a confluence of a 38% retracement there, and then sort of see if we can get that to then obviously target the highs, but pop through and then potentially look for a measured move up to sort of mid 47s. But I just don't see, unless you see something structurally change, this gold position just whittling out. And certainly, unless we see some incredible wick high, which I don't think we're going to see, sort of showing sort of like mass hits of stops, then we're not going to see it. A medium-term high for the time being. Silver, another one that sort of really just kicked back to life. I mean, again, look, if we look at this, whoops, not that one there. If we have a look at this sort of move here, like, I would say gold's definitely outperformed silver in this regard. But certainly when silver turns it on, it really hammers. So where are we at here? So look, it is looking a little bit weaker than gold, just in the sense of this move up here. But again, that was that breakout move midweek, 38%, or didn't even get to the 38%, and then it just absolutely hammered to the top side there. So if we say this, excuse me, was a medium-term high, and we sort of... And we say this is a bit of a medium-term high. I'm losing my voice a bit here. Not that one. Never got that move down to these buyers. We could sort of go, okay, where would it line up with it all? Well, again, wishful thinking might sort of say that sort of you come back down and retest these levels over here. Again, it's quite a steep sort of move, and I'm not a big fan of these kind of trends like this. To me, it's a bit too steep. Like, I prefer a trend that's like on a slightly better gradient to sort of say that, hey, that's a channel. When things are moving on such a steep sort of gradient like this, that's kind of like just, again, people were short, everything, all the hallmarks for short, and then hold on, wait, no, what? Metals are going through the roof, boom, 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 and it hammered up to the top side here. So that's why I'm reluctant to buy these things without a proper sort of structural move. I want to see something that you can go, okay, there's some actual structure behind this. This is all just sort of like buy it, close your eyes and buy it no matter what kind of thing. So, you know, again, look, we're testing a little bit of this trend. Just because you break the trend doesn't mean it's going to be doing anything. A move to 68 could probably just as easily see a bounce back up to just 70s again. It did sort of come into 70 a couple of times and test over here. But, you know, again, if this thing breaks, it's not going to go like this. Like, it's not going to happen like that. Most likely what we're going to see is a move down here, move back up, move down here, move like that. And maybe that's a little bit wishful thinking. Let's put it there. So, you know, and retest these previous levels through here, which is obviously previous high, resistance, it is support. So this would be an area that I'd like to sort of focus in on just past the 38. Look, it could sort of obviously overshoot these things, but as long as it sort of comes down and sort of holds around this area over here, that's your better sort of entry for a long position to sort of jump onto this continuous move. Because the thing is with these, it's sort of like they've moved a lot, but they moved a lot through this area, and you sort of think, okay, yeah, it's done, but it's obviously not, and it goes on further. So with these things, you're not necessarily going to pick a top. What you want to do is wait for a decent size correction, and by decent I don't mean sort of like, you know, comes down here and then goes up here. I mean sort of as in like, you know, we're actually seeing a concerted effort from the sellers to move in, and then the buyers overcome it and they sort of move up. And then we see that second move from the sellers to come in and say, hey, look, you know what? That's great. I can sell it again for a bit cheaper. So it's all about sort of going, what are the buyers doing? What are the sellers doing? We know the sellers are here at the moment. Like you can see it. It's hitting resistance. what you want to see is a battle of the two. You want to see the buyers go, okay, look, we're sitting down here. They get a buy up. They move up like this, but the sellers say, hey, look, you know what? We're going to move down, and they take a lower level. That's what you want to see, this kind of action, sort of sellers moving down. At the moment, we're just seeing it sort of go through each time, and the sellers relinquish, and it's moving up with it all. So there's no point sort of looking for shorts or any sort of reversal plays till you see this sort of structure of it sort of coming down, and actual move down from the sellers to really sort of push this thing down. And then you're going to have the buyers come up and then move down. It's the same three-leg thing that I'm always talking about. And this is where we're going to move up. We've found resistance. We're going to move back, find support. Where would support come? Well, most likely at previous resistance levels. And then we see the move up there. This is your tell. This is the one that's going to give you, if you want to see it lower, a lower high. And you can see the buyers have moved up, but the sellers then overrun them and then move down like this. But the thing is, with this, with such a strong trend, when you look at sort of what's happening with the dollar, you know, there's a good chance that, one, first of all, you come up and test these previous highs, like we saw through this area here. Here's your sellers here, holding it, till they're not holding it anymore, and it pushes through. Because the thing is as well, like unless nothing changes structurally with the dollar, there's no real reason for people to then take their money out of metals and put it back into the dollar. The dollar's, again, like it was in 2025, just not really a sort of feasible option as a place to sort of park the capital. They're all sort of fleeing from this thing at the moment. Let's just clear this up a little bit. So I think sort of certainly, you know what I mean, it's not, we've got a little top here. So, you know, close up above here, well, we're on for the next leg. But I would say a better risk trade would to be looking around these 38s. Now, it's not going to, as I said, it's probably not going to come here straight away. But, you know, should it sort of drift back down to these levels over here, this is where you look for a little bit of a base to start forming, like 2 or 3 rejections around this level here. And then we look to sort of target back up to those previous highs. And again, if nothing's changed structurally, like as in sort of on a macro level with the dollar, well, there's no reason why it can't just sort of pop through. And even if it just tests through the highs over there, it sort of shows that there's enough demand to sort of continue on with this move. All right, and with the dollar, as I keep saying, look, the dollar's looking shocking. It's found a little bit of a sort of base down here. I thought maybe it was going to drop through here, but again, not happening quite yet. Now, look, with these sort of moves, it doesn't mean that the dollar's destined to come down here in one move. We could definitely see these push-ups, and this is what we're kind of looking for here at the moment. The fact that the dollar broke this large sort of rising trend. Now, this is from the start of 2025. I covered this the other day. Remember when I called up? If I can find where it is. I used to cover this every day. This is another one that broke the trend. Now, admittedly, this is on a higher time frame, but structure's still exactly the same. This was a weekly time frame on USD CNH, so against one. Danced around, but once it broke, it was really quite detrimental to it all. Now, the dollar may not necessarily follow this exact sort of path because this is really just absolutely obliterated. Even through the period in which we've seen dollar strength, this thing's still sort of sold down. So it's a little bit sort of different to it all. But the point, what the takeaway from this thing, if I can find, where is it? The takeaway from this, I'll get back onto the proper time frame here, is that we've danced around this support here. We've now broken to the downside, which means it's changed from buy the dips to sell the rips. So just because we've broken here doesn't mean that we're coming down here in one move. But what it does mean is that should we see a move up and break through this level here, we can expect probably a retest and the market to be selling rips, i.e. moves up, oh, market's great, I could sell it more, to come down. And that's how we'd probably expect the dollar to come a little bit lower. It is temporarily finding a base here. It's not confirmed to get this bounce, but this is what this little arrow is here. So above 99, look up to 99.40, maybe 99.35. I don't reckon the bounce is going to be massive, but anywhere up over to this area over here, we can expect that little pullback in metals because we know it's got a very strong inverse relationship at the moment. But the trend It's like that sort of cute saying, the trend is your friend. Well, the trend is sort of saying, hey, you know what? The dollar has broken its trend and it's moving down. Sell the rips. Metals is moving up, so buy the dips. And if we see a rip up in here, we'll probably see that dip down in metals. But if we see a rejection and the sellers go, that's great, we can sell this thing a little bit further. Well, same sort of thing, just in reverse with the structure. We're coming down, we've found support, we move up, we find resistance. Resistance at previous supports, target the lows to then break down further. And that's why I sort of showed that sort of Asian, the yuan trend break before, because that sort of shows that sort of like, you know, it's significant. When you break these things, it's significant. The ramifications are going to be quite big. And, you know, we could really sort of be looking down to these lower levels. This was a gap from ages back. We did fill it, as you can see, to a point here. It's around the 61%. You may see a deeper bounce once you get to these levels down here. But I just don't think we're just going to see the fact that it's broken this trend, I think changes the dynamics, as in now we're selling rips opposed to buying dips. A move up to here will obviously, well, not will obviously, if all things work, will give us a little bit of a sort of pullback in the metals, but it'll only be brief. So the fact that now we're sort of selling rips and we're buying dips means that sort of a move up to here and a rejection from these levels over here, you should expect the dollar to keep moving down, because this is what they're trying to do. Everything that's sort of come out, every bit of data, every bit of sort of wording has really led it to the downside over here. So you should expect this thing until you start to hear that sort of wording change, till you start to see inflation really kick up. And even if inflation, you need jobs to be sort of going a lot stronger there as well. Till you see that sort of actual shift, you should expect the dollar to probably sort of continue drifting to the downside, and those flows basically to be coming into metals. So I think sort of we would probably be worth watching for a break above this level over here, just to sort of go, okay, well, what's happening when we move up over here? We'll probably be looking to sort of find a good level and a bit of support in those metals lower to then sort of catch the next leg. All right, and finally just tick along. Have a look at a couple of these Aussie pairs of that, because Aussie is really ripping up. Now, I put this up long time ago, this potential Head and Shoulders. And I was like, no, there's no way we're going to get back up over here. We were down here at the time. I thought, last hurrah before we break down to the downside over here. But you know what? It's just kept on powering on, because the dollar just keeps on sort of can't get out of its own way. Look, the RBA is quite hawkish. And now we're sort of getting inklings of, you know, the Fed really coming in a little bit sort of not as hawkish as they were. You know, it's been a very back and forth year with them, because, you know, start of the year prior to the war, you know, 3 cuts, then, you know, second round of inflation's going to spike up higher. You know, we're going to have to hike, you know, oil's going up. We're seeing all that stuff happening now. Oil's ripping up, pushing back towards the 90s, and that's not showing any sort of real signs of properly slowing down. Inflation has seemed to have sort of abated a little bit for the moment. Jobs are a little bit sort of cautious and weak. So the Fed's all of a sudden, the market's going, hold on, wait, maybe they're not going to hike. Maybe they're going to hold. Hold seems like the sort of the thing at the moment, because it's so back and forth with it all. But anyway, the point is that when you look at the two central banks and that, RBA, they were sort of saying last time, if we're going to, it's not a matter of whether we're going to hike, it's whether we're going to hike now or next. There's no talk of cuts. There's no position of cuts. It's, are we going to hike, or are we going to hold, or are we going to hike next time? Obviously, they held, so most likely we're going to see a hike next time the RBA meets. We'll see, actually. We'll see. We'll work a little bit more on that the closer we get to it. But certainly at the moment, you can see it really pushing up into these previous highs over here. Should this thing break back down over here, well, maybe this will become the Head and Shoulders. We'll see. Certainly at the moment, it is not looking like it. That was a very big day that it pushed out to. Where are we? Back up to 71.5. Geez, wow, it's really pumping along there. Aussie yen. Geez, the BOJ spent so much money breaking this thing down, and it's lasted, what, 2 weeks or something? Where was this? Yeah, end of July, came down and is right back up the top over here. Now, with this, it's a bit of a tough sort of call because, of course, you know, as I've just spent the last 5 minutes going, hey, look, you know what, the RBA is very strong, and you know this is why we're seeing this move, because BOJ is just notoriously slow to act. They talk a little bit tough, but then they don't do anything. It's not a perfect trend through here, but we are seeing previous levels over here where the resistance was resistance. We're getting right up near the highs over here. So I guess, look, you know, the market's not looking at the Aussie yen as an intervention tool, but we are getting very close to the point where they said, hey, obviously they need to start to act to do something. I mean, if you have a look at UJ, it's probably a better representation of it. It has not really recovered much at all, 50%, and it's actually really sort of weak on it over here. So I think this is more sort of like particularly an RBA story opposed to a BOJ. Because if the BOJ, I mean, the dollar's very weak, so yes, okay, it hasn't really sort of got back to the top over here. Let's have a look at a couple of these other ones. No, maybe it's just a dollar story because this is GJ, pound against the yen, and that's sort of pretty much right back up to the top over here as well from this move down. What have they done? Yeah, so back past the 78. That's a little bit more similar to probably what we're seeing in Aussie as well, Aussie yen. Wow, this thing's actually way past the 78. Really sort of pumping along here. So, I mean, again, same sort of thing. We can see where did the buyers come in? Well, they came in pretty much where we kind of sort of thought they were going to be. So let's grab a fib over this one here. And you can see this is what I'm talking about. This is why the fibs are quite important as well. Because if we look at this in a move through here, and we go, okay, what are the buyers doing? What are the sellers doing? Well, the sellers pushed this thing down. Well, really, the sellers didn't. The Fed did. But the Fed pushed this thing down. The market sort of dumped it all off. Okay, how strong is this move? Well, you know, we can see that the pullbacks, if that's this move and we're looking over here, we've already given back 78. So it means downside is obviously structurally weak. It's allowed it to get back up to 78. It's almost allowed it to completely undo the move. So we know the downside is structurally weak. Now we look at the sort of upside. What's the upside doing? So from this point down here, and sort of like, you know, ignore this part of the move, and look at this part of the move here. Well, what are the buyers doing? What are the sellers doing? Well, if we say here's the buyers down here, because this was a high at one point, this little point here, 23%, took out the high. This little range that it got to, didn't even get to the 23%, took out the high. Where's my little line gone here? With the big sell down here, came into where we sort of had the buyers previously, 38%, took out the high. Now, this is what I'm talking about. This particular structure here, if you go back to sort of what I was talking about with gold and silver and these kind of things, we've got a trend here. Like, this trend isn't perfect because, you know, that's kind of where it would be. But, you know, whichever, whatever. I think I had it on an 8 hour or so. But the point is, you can see that it did break and it provided a nice little pullback through here. But again, only came to the 38%. This is given when this was the high over here, 38%, and powered all the way through here. So, you know, what we could sort of look for this kind of particular trade here is if you get back down underneath, say, 1330s, call it 1330, back underneath this previous high, you need to see the sellers reclaim this level. Because if you look at it, we've got the sellers are sitting just here. Sellers are sitting just here. Whatever, I'll just leave it at that for now. That's fine. They've pushed it down. That's fine. Buyers pushed it up. You need to see these sellers make a concerted effort to then hold it at a lower level. They haven't done that. They've gone through and said, hey, look, technically, we can't necessarily call this a high, but this is where they are currently because this is where we stopped. And so a little bit of a pushback into the end of the week. What you need to see with this move here to sort of confirm it will be a pushback down underneath these levels where we know the sellers were previously. There's a bit of a sell zone all through here. Push up. We need to see that concerted move from the buyers moving up to show that they, hey, you know what? Trend's your friend, yada, yada, whatever cutesy sort of saying you want to say. Move up, and then we want to see that the sellers reclaim this level here. and then we see a shift, and that means that you come back to sort of targeting, how committed are these buyers? You got to test how committed are they, because they've been overrun by the sort of sellers here. Come back to test this and then break through. So that's your confirmation that this thing is going to come down a little bit. We can't sort of say, hey, look, here's a top and it's just going to go boom down like this. This move here was separate. This was intervention. This was like, the market, well, not even the market saying, hey, let's bail it. It was the Fed saying, hey, let's flood the market and control the currency. Most likely, we're getting back up to those levels on the Aussie yen, but we're not there on the dollar yen, and the dollar yen is the one that we know that they're really paying attention to. So till the dollar yen gets back up to those highs, then we could expect some pullback. But till then, there's a good chance as well that, this thing sort of remains fairly bid. But it doesn't mean we can't get some corrective moves. Because if we look at this separately, this is where the market was holding Aussie. Now, we had some Aussie data out this week, and obviously the market just said, well, we don't care, because the dollar is just, the Aussie dollar is still just ripping higher. We had weak numbers with employment, came in negative 15,000. We had unemployment tick up. This gives the RBA a little bit more sort of pause for thought, and that's why I corrected myself before when I was saying, oh, look, the RBA is going to hike next time. That's based off what they said at the press conference. That's the way that they were talking, though. As everybody's sort of favourite line from these central banks is, we're data dependent. Of course they're data dependent. Okay, that's fine. Game changes a little bit. But what we can sort of see is that sort of, the jobs came in a little bit weaker, which doesn't necessarily mean, okay, they can't hike, because remember, they want to push unemployment up, because unemployment higher, less people employed, less, in theory, the way it plays out, less people making money, less money to spend, helps curb inflation. When the market's flooded with everybody so sort of like loaded up with cash, well, they just go and spend. And so people put the prices up. And that's what sort of leads to these levels of inflation. But, higher employment, less people got money to spend. Businesses aren't sort of making sales. They can't keep putting the prices up because they won't get the sales. So anyway, that's how that sort of works with it all. What we can kind of look for is the idea that, RBA has a little pause for thought just on the fact that the job numbers were weak. So the hike is not as guaranteed. Forget the BOJ, they just talk tough but then never do anything. What we can sort of look for is this kind of structure over here. You need to see that second effort, because this is what we talk about all the time. Up, found resistance, back, find support, tackle the highs, into the new leg. So we're in a new leg. So realistically, we could probably look for a pullback to mid-13s, this previous resistance. If the buyers step in there, well, we're targeting that, and we're probably going up to 14. So if we see this concerted effort from the buyers moving up and they hold this level here, and we see price unable to break through 1350, then it's a higher likelihood then that we're going to see the next leg moving up. Because if we jump a little fib just on this move here, saying that this was, let's clean this up a little bit, saying that this was a sort of just measuring the strength of this leg, well, that 38% retracement comes in perfectly with that previous resistance. And what we're looking for on the downside, let's get this out of the way. What we're looking for the downside here is for the sellers to move down and reclaim this level here. Well, you've got to consider both sides of the coin. The buyers were here. So, the buyers are sitting, whoops, select this. The buyers were sitting back here and they gave up. What happens when the buyers step through and try to reclaim that level? So this is really going to be the pivotal kind of level, in my opinion, this 1350. If we see a break, it doesn't mean, okay, boom, it's coming straight back down, but it moves it to the idea that the buyers were unwilling to sort of reclaim that. So now we've got to see, do the sellers reclaim it on a bounce through there? But if the buyers hold this level here, we're targeting the highs, potentially move through, and we're probably looking back up mid-14s. As to whether we break through there, well, I don't know. It's a very sharp sort of recovery with these sort of things. You like to sort of think that these things may sort of, take a bit of time to drift up here, but the market just, I mean, imagine they said they dropped 88 billion or something to sort of control the markets there, and these things bought them a couple of weeks really. Anyway, look, I'm getting distracted with it all. I do think that probably we'll get a little bit of a sort of pullback down to these levels over here, but 1350 is pretty much where I'm looking at for sort of a make or break for the Aussie yen moving forward. All right, anyway, look, a little bit all over the shop of that today. It's been quite a sort of hectic week with it all. Let's have a look at what data we have coming out for the week. Typical kind of Monday, nothing really sort of interest. Monetary policy meeting minutes on the Tuesday. Interesting, gives us a little bit more insight there. So we've got CPI coming out in Australia, and wow, that is a big drop off they're expecting with the yearly headline figure there. Month on month is a big jump up, but we're seeing quite a big jump up, and this is where it makes things a little bit difficult. I would say the sort of the headline of the yearly is probably the thing that sort of like, at least the sort of the media and everything sort of targets, because obviously over a year, like month to month and that, you're going to get movements. And if we skimmed over it this time, but if you look at oil, what's oil been doing? Well, it's been ripping up to the top side over here. So, it's really sort of coming back. So that's probably why they're probably expecting, energy prices to sort of factor into that monthly kind of print of a higher CPI. But, overall, that's monthly, that's fine. This is, it's smoothed out over to a year. And then, of course, you got your the trimmed mean, which is excluding oil or energy prices in that, looking to be flat. So I think the headline of sort of down from 3.8 to 3.3 is kind of, takes away the whole, hey, we need to hike. So it's not necessarily ultimately bullish for Aussie here. So again, if we're looking at that yen play, CPI is probably going to move the market a little bit more than in the employment numbers. Employment, all bits of data across things aren't equal. Like employment numbers over in the US will really move things. In Australia, they're never near what they expect anyway, and they're very sort of plus 60, minus 15, plus 15, plus 40, minus 6, it's all over the shop. So CPI might be something to certainly be looking out for. If you get that sort of weaker number here with the CPI, it's basically the idea is like, okay, do we need to keep hiking? Do we need to hike if inflation's coming down? Because remember, hiking is to curb inflation. If the job numbers are weak and the inflation is coming down, well, it means that it removes that little necessity to be so hawkish, because the jobs are, starting to suffer while the inflation is moving quite strongly. That's a big drop towards your target. It's still way above the target, but as long as it's moving in the right direction, they sort of think, well, if it's going the other way, it's not tight enough. We need to hike. If it is moving in this direction, in theory, you can hold the rates where they're at and it's having the desired effect. Unemployment was up. Employment numbers were down, which is not as good, but of course, you know what I mean. They're trying to sort of get people, they still want, they don't want the economy to sort of fall over. So the employment numbers down is kind of like oh shit, we can't do it. And the unemployment numbers is like, okay, it's having the desired effect. But then again, if you've got the CPI and you're looking at the CPI and that's coming down, well, that's moving in the right direction. Do you need to go even harder? Probably not. So if we see this in here, it's probably going to call for a little bit of a hold. Again, it'll call for a hold, but you got to think about where's the market position. Well, the market's positioned for a hike, because that's what they said. It's like, as I said, last time they had the press conference, they said, okay, are we going to hike this time or next time? Data dependent. Well, here's the data, and the data's saying you probably don't need to hike. So I would say that's a reason for Aussie to see a little bit of weakness should these numbers come out like that. So it's important to have a look there. PCE, so over in the US, looking absolutely flat as attack. Pretty much exactly sort of what they had previously. PCE is the supposed Fed's preferred inflation indicator. I don't know. We really got to, I personally got to take a little bit of time to work out what this Walsh dude's doing. But everything at the moment is not really sort of saying, hey, look, let's pile back into the dollar. The Fed need to do something. He seems very blasé about it all. He's got his team of whatever they're called and that sort of like to handle all these different areas. He's sort of handballing it off to people. But yeah, this is not necessarily something that's going to see the market sort of pile back into the dollar. GDP, where we at with that? It's actually still quite high though, isn't it? So yeah, interesting. Ticking along, other ones, durable goods, these kind of things, they're not going to be anything that's going to move the market. Bit of Aussie data on Thursday, not going to move the market. We've got Walsh speaking at the end of the week. And Jackson Hole sort of starting from next weekend. It's where all the sort of bankers sort of get together. So reasonably light. CPI and PCA, they're the ones to watch for the week. All right, that's it from me.